Well, hey there. Welcome back to the Equitable Money Project, where we talk all things small business finance and how to keep more money in your pocket. If you're new here, I'm Meg Wheeler, and I'm a CPA and small business owner just like you. Now, running a small business is no small feat, especially for marginalized business owners navigating a system that wasn't exactly designed with us in mind. But here's the good news. The tax code has some gems in it that can help us keep more of our hard-earned money. That's right. Today, we're talking tax deductions. And before you tune out thinking, oh, taxes, hear me out. These deductions can save you thousands of dollars and make all that hustle worth it. In this video, we'll cover what deductions are and why they matter, the most common deductions small business owners should know about, and tips to make sure that you don't miss out. Now, grab a notebook because we're about to turn tax time into savings time. Let's start with the basics. A tax deduction is an expense that the IRS allows you to subtract from your income, which lowers the amount of income that you're taxed on. So for example, if you made $50,000 last year and claimed $10,000 in deductions, you're only taxed on $40,000. That means less money to Uncle Sam, more money for your business and for your community. But, and this is important, not every expense is deductible. The IRS has rules, and the magic words that you need to remember are this. Ordinary. Is the expense common in your industry, and is it necessary if the expense is helpful and appropriate for your business? Okay, now let's talk about the most common deductions for small business owners. Let's start with the home office deduction. If you're working from home, this deduction is a no-brainer. You can deduct a portion of your rent or mortgage interest, utilities, insurance, and even repairs. Just remember the golden rule. The space must be used exclusively and regularly for business. Now, there are two methods to calculate this, simplified or actual. Check out my other video for details on this one, but trust me, this deduction can add up fast. Now, are you glued to your phone and internet for work? Same. You can deduct the business portion of your cell phone and internet bills. If you're running an online business, your internet is likely a significant part of your operation, so don't skip this one. If you're using your car for business, whether it's to meet clients, deliver products, or run errands, you can deduct those expenses. Now, there are two methods for deducting your car expenses. The standard mileage rate, where you deduct a set amount per mile driven for business, that rate's set by the IRS, or actual expenses, a portion of gas, insurance, repairs, and maintenance, based on how much you use the car for business. Pro tip, keep a mileage log or use an app to track your business trips. The IRS is a big fan of documentation. Now, did you know that you can deduct 50% of the cost of business-related meals? Whether it's a coffee meeting with a client or lunch with your mentor, those expenses can lower your tax bill. But make sure to document it, who you met with, the purpose of the meeting, and what you actually spent. Now, if you bought a new laptop, printer, or even office furniture, those are deductible as business expenses. If it's a big purchase, like a computer or a camera, you might be able to deduct the full amount in 1 year, or you may have to depreciate it or deduct it over several years. Pro tip, even smaller items like pens, notebooks, and paper clips add up, so keep track of those too. Now, if you're paying for a CPA, a bookkeeper, a lawyer, or a marketing consultant, those professional services are usually fully deductible. Don't feel bad about outsourcing because getting help is part of your growing business, and this deduction can soften that blow to your wallet. Now, if you're traveling for business, think conferences, client meetings, or site visits, you can deduct airfare, lodging, car rentals, and even a portion of your meals. But here's the catch. It has to be for business, not a vacation. So you can't claim that beachside cocktail unless you're actually networking while you're sipping. Now, investing in yourself is investing in your business. Whether it's a course, a conference, or books related to your field, those expenses are usually deductible. For marginalized business owners, continuous learning is often key to breaking barriers, so don't skip on these deductions. Now, before we wrap up, let me hit you with some quick tips to make the most of your deductions. Number one, keep records, save receipts, track expenses, and use accounting software to stay organized. Number two, separate your finances. Open a business bank account and credit card to keep your personal and your business expenses separate. Number three, consult a tax professional. A good CPA or tax advisor is worth their weight in gold. They can help you find deductions that you might have missed and keep you compliant with the IRS. Here's the bottom line. Tax deductions aren't just about saving money. They're about leveling the playing field. As marginalized business owners, we already face enough challenges. These deductions are tools to help us reinvest in our businesses, build wealth, and create opportunities for our communities. So don't leave money on the table. Take the time to track your expenses, work with a pro if needed, and claim what's yours. If this video helped you, hit that like button, subscribe for more money tips, and drop your tax questions in the comments. Let's keep building businesses that thrive and change the game.